Good evening, students. I will revise the trust topic that we had started last time. I had requested you to revise everything. Good evening, Satish. Yes. So we had started last time with the charitable and religious trust. We had done with section 1023C. What is 1023C trust all about? And then we had seen from 1st October 24, you cannot apply for 1023C registration other than the specific trust which are listed over there. Yes, and now we have under 215 charitable and religious purpose duly defined.
Ma'am?
We had seen what is the meaning of advancement of any other object of general public utility. Yes, so any doubts, any questions so far?
Ma'am, there is no disturbance from your side.
One second. Is it fine now? Yes. Good evening, Jenny. Yes. Okay. So let's get started with the topic of trust now. We have seen what is
Excuse me, ma'am.
Yes.
Ma'am, can you once again repeat the repayment of capital topic? I don't clear that. I
Okay,
don't understand.
no problem. I will repeat that. So,
Thank you, ma'am.
yeah, basically, if you see here, one second, I think there's some problem. Yeah. So, if we go to this particular section, which is there, right, for the reads. So, what was this saying is that in case where I'm making the repayment of capital or redemption of units, right? Or repayment of any kind of debt. Basically, if I'm paying any sum to the unit holders, which is not in the nature of the dividend, interest, or rental income, because that is specifically taxed in the hands of unit holder, or any amount which is chargeable in the hands of REIT. So if I'm paying any sum other than these four sums, which is dividend, interest, rental income, or any other sum which is taxable in the hands of the REIT, mainly any other income, short-term gain, long-term gain, any other income. So basically what they're saying that if I'm paying other than the income to the unit holder,
Ma'am,
which is not getting taxed in the hands of REIT or in the hands of unit holder, then we need to see the two circumstances. One, if that amount exceeds the cost of the units. If that amount exceeds the cost of the unit, we will charge to tax under 56(2) under the head income from other sources. What is the amount that we will charge? Which will be A minus B minus C. A is the amount paid to the unit holders. B is the amount of the cost of the units, and C is if the amount is already taxed under this section. So that is 56(2)(12). If I have paid the amount to the unit holders, which is lesser than or equal to the cost of acquisition, 56(2)(12) says that there cannot be any loss. If there is negative amount coming, A minus B minus C is negative, then we'll consider this as 0. So then 48 says, section 48, which is basically the method or mode of computation, that provides that in case the cost of the acquisition shall stand reduced by that repayment amount which is made, which is not in the nature of dividend, interest, or rental income, or any sum which is taxed already in the hands of the REIT, or even any amount which is already taxed in a 56(2)(12). Because if it is taxed under 56(2)(12), you will not come to 48. It is only when 56(2)(12) is not applicable, you will come to 48. Is this clear now?
Yes, ma'am. Ma'am, they say that income which are not taxable in the like dividend, interest, and rental that were taxable in the hand of unit holder, and other incomes we consider that will taxable in the trust. So, what other income they are talking about here?
That is the repayment of capital. That's what I'm saying. So any amount paid to the unit holder which is not in the nature of income, which is a capital receipt in the hands of the unit holder. Basically, they are trying to tax that,
Okay, ma'am.
right? Because they are repaying or redeeming the units, they are repaying them the capital, or they are repaying them the debt. So that is what is supposed to be targeted by 56(2)(12).
Okay, ma'am. Thank you.
Yeah. Any other questions, students, with respect to the last class? See, it's good that you have revised and come. I'm very happy about that. Any other question, if someone has, with respect to REIT, AIF, securitization trust, or charitable trust? Okay, great, Ginny. Okay, so let's get then started. If there are no further questions, now we will start with the charitable trust. What did I tell you about the charitable trust? What is included under 215? Yes, let's quickly revise and then move towards the charitable trust. What is included in 215? Yes. I need answers. Yes, please. Sorry, your voice is not audible.
Ma'am, relief of poor, the activities, relief of poor's, education, medical relief, yoga, preservation of monuments, preservation of environment, and any other general public, general public.
Right. Advancement of any other object of general public utility. Right.
Yes, ma'am, utility.
Yeah. So you can just remember these points, that it's relief of poor, education, medical, yoga, preservation of environment, and preservation of monuments. Right. So, and then advancement of any other object of general public utility. If the activities are carried out in the nature of trade, commerce, or business, irrespective of the application, it will not be considered as the advancement of any other object of general public utility, unless if the activities are undertaken in the course of carrying out the objective of advancement of general public utility and the receipts are less than 20% of total receipts. Are we clear? Now, let us understand how the computation works for the charitable trust. So we'll start with the statement of total income. The first year is the gross receipts. So in the case of trust, you start with the gross receipts which are there, right? Which is basically the income derived from the property held for charitable or religious purposes in India. So instead we can either write here income derived from property held for charitable or religious purposes in India. Right? Now, what is the income derived from the property held for charitable or religious purposes in India? What did we discuss? What is the income derived from the property held for the charitable or religious purpose? So basically, any income that you are deriving with respect to carrying out these activities, right? That will be considered over here. Now, usually income means the receipts minus the expenses, right? What is the meaning of income? Income is the net income usually, isn't it? However, for the purposes of this particular amount, we will consider the gross receipts. We will not consider here the net receipts. We will not reduce the expenditure over here. Are we getting this point? So here the income will be considered as the gross receipts and not the net receipts. And remember, this is going to be very important when we will solve the question. So you don't take net receipts over here. Here the income means the gross receipts that you have. Are we clear? So this is the first part that you will write in your statement of total income, which is income derived from the property held for charitable or religious purposes in India. The second one here would be, which is considered as income, is voluntary contributions. So a trust gets a lot of contributions from the donors, isn't it? So the voluntary contributions that the trust will receive, that will be considered as income unless those are given with the directions that it shall form part of the corpus of the trust. What is the corpus of the trust, students? Any idea?
Ma'am,
What is the
donation for specific purpose.
Correct. Donation for specific purposes. You're right. So, unless the donations are given with a specific direction that these shall form part of the corpus of the trust or institution, that will not be included. Are we clear? So, other than corpus donations. So the first will be income from property held under the trust, which is income derived from property held under trust, which is for the charitable or religious purposes in India. Are we clear? That is the first one. And there you will include the gross receipts. And second will be the voluntary contributions which are received will also be deemed to be the income. However, corpus donations, that is the contributions with a specific direction that they will form part of the corpus of the trust, will not be treated as income. However, here we have a condition. So, corpus donations are to be deposited in the modes specified under section 11.5. Now, what is 11.5? So, under 11.5, there are specified modes in which the corpus donations are required to be deposited. Are we clear? So, what are these modes? There are multiple modes which are given under 11.5. Basically, these are the investment options that the trust gets if the corpus donations are invested in these modes which are specified under section 11.5, these corpus donations will not be considered as the income of the trust. That is very, very clear. So, if you deposit under 11.5, 11.5 is section, it is not some option. 11.5 is a section which specifies the different modes which are there. And if you deposit within any of those modes which are given under 11.5, there will not be any tax on that particular amount of the corpus donation. Are we getting this particular point? So what are the modes? For example, investment in government savings certificate, post office saving bank account, deposit with the scheduled bank or cooperative bank, investment in the government securities, investment in the public sector company, or deposits in public sector company. So basically, investment in any of the government bonds, government saving certificate, the government securities, public sector undertakings which are there, investment in the approved financial corporations, or long-term finance companies, companies which are providing long-term finance for construction of houses, investment in immovable property. So these are some of the specified modes which are there. There are multiple specified modes which are there. You can just check under 11.5 that there are multiple modes which are given. Are we clear? So you have to ensure, or the trust has to ensure, that it's depositing the corpus donation in any of those modes. So if it does that, then there is no problem. Now this is number 2. Now the voluntary contributions after that. The number 3 point here will be the corpus donations which are there. Now, if the donations for the repair or renovation of the religious trust are also given, if the donation are given for repair or renovation of the religious trust, that will also be treated as corpus donation, provided it is applied for the purpose for which the contribution is received. It is not utilized for making the donation to any other trust, or again it is deposited or invested in the modes specified under section 11.5. Are we clear? So if you can just write it over here. This is not income if deposited in modes specified under section 11.5. Right? And secondly, the corpus donation for the repair or renovation of the religious trust. For repair or renovation of the religious trust, again, it will not be considered as the income if the conditions thereto are satisfied. So what are the conditions which are there? If the amounts are utilized, specifically for the purpose of the repair. So amounts are utilized for the purpose for which contribution was made. B. Not utilized for making contribution or donation to any other trust or any person. C. The amounts are invested in the mode specified in section 11.5. Are we clear? However, if the trust violates any of these conditions, this corpus will be treated as deemed income of the previous year in which the conditions are violated. Are we clear? Are we clear? So, if the conditions are violated, this shall be deemed income in the previous year of violation. Okay, this will be deemed income in the previous year in which the conditions are violated. Fine, yes or no? Okay, now next one is the income from the government grants or securities. The third one will be third nature of income, you can write here. Income from government grants or income from government securities. This is also considered as the income of the trust only, right? Number fourth point will be the income which is the anonymous donations. The income in the form of anonymous donations. Now students, what is anonymous donation? Any idea?
Ma'am, the donation given by the person who does not reflect his name.
Yeah. So basically one does not know who has contributed. So you have these donation boxes kept in mandirs or in the trust where you can just go and deposit the amount. So nobody knows who has done that. So that is known as the anonymous donation. Now, under the anonymous donation, there is a specific provision of how do we tax these anonymous donations. So, section 13, it says that the exemption under 1023C or under 12A shall not be applicable in respect of any anonymous donations which are referred to in section 115BBC. Now, what is section 115BBC? So, 115BBC, which is there, that is a specific section for taxing the anonymous donation. Now, what does it provide? It provides that the anonymous donations will be taxed at the rate of 30%. Are we getting this point? So the charitable trust under section 11 or under section 1023C, both are subject to this 115 BBC. If they receive the anonymous donations, it will be taxed at the rate of 30%. And they have given the exemption limit of the amount up to which the anonymous donations will not be taxed at 30%. Beyond this amount only, it will be taxed at the rate of 30%. So what is the limit which is given? Let us write down. So 115 BBC provides a limit of 5% of total donations or rupees 1 lakh, whichever is the higher. Beyond this amount, the tax will be payable at the rate of 30%. Are we clear? So, the tax will be beyond the specified exemption 30%. Are we clear? So up till this amount, it will be eligible for the exemption. Beyond this amount, it will be the excess donation will be taxed at 30% under 115 BBC. Now, for the purpose of considering the 5% of the total donations, you have to consider here the total donations here will include voluntary contributions, the anonymous donations, as well as the corpus donations. Because it says total donation. So here even the corpus donation will get included. Are we clear? So now I'm giving you 3 situations. You have to tell me the answers. A, B, C. My total donation is 15 lakh, 30 lakh and 40 lakh. My anonymous donations will be 4 lakh, 7 lakh and 10 lakh. Now tell me what is the taxability?
Ma'am, in first condition on 3 lakh, pay 30%.
Yes, right. So here the exemption will be 1 lakh, right? And the anonymous donation taxable at 30% will be 3 lakh into 30%, right? Then in the second case,
Ma'am, 1.5 is exemption
correct.
and 5.5 lakh is taxable at the rate 30%.
Yes. And in the third case,
Ma'am, 2 lakh is exemption
correct.
and 8 lakh is taxable at.
Correct. Are we getting this particular point? Now, what about the donations which are the other than the anonymous donation? So 15 lakh minus 3 lakh will be 12 lakh or the balance donations. 30 lakh minus 5.5 lakh is 24.5 lakh and 32 lakh in the last case. So what will be the tax rate on this?
Ma'am, depend on the trust.
It's a charitable trust now.
Ma'am, it is normal tax rate will be applicable to
Correct.
bank donation.
So these will be taxable at the normal rates. Plus these donations which are there will be also eligible for the application of income. So basically, see, it should not be the case that entire 4 lakh which is there is not available for the application of income. So out of 4 lakh, only 3 lakh will be taxable at the rate of 30%. Balance 1 lakh will still be eligible for the application of the income. We'll see what is the application of income in shorter time. But the anonymous donations in excess of the specified limit which is there are going to be taxed at the rate of 30%. Now this provision does not apply, this section 115 BBC does not apply or is not applicable to the trusts which are created wholly for the religious purpose. So the trusts which are created wholly for the religious purposes would not be taxed under 115 BBC. Are we clear? What about the trusts which are created partly for charitable and partly for religious purposes? In those cases, what will happen? So, the anonymous donations to the trust or institutions which are created or established partly for charitable and partly for religious purposes would be taxed only if such anonymous donations are made with a specific direction that the donation is for any university, educational institution, any hospital, or any medical institution. Other than that, the anonymous donations will not be taxable for even for that trust. Are we clear? So just write down. In case of the trust which are established for partly charitable and partly religious purposes, the section 115 BBC will apply only if the donations are received that the donations will be applied to educational institution or hospital. Is this clear? Yes or no?
Yes, ma'am.
Okay. So therefore, the anonymous donations which are there that form part of the voluntary contributions, basically it's again like a voluntary contribution only, but where the identity of the donors are not maintained, these would be taxable at the rate of 30% beyond this specified limit, which is 5% of total donations or rupees 5 lakh, whichever is higher. Are we clear? Yes or no? Any doubt? Any questions?
Ma'am, in other cases, in religious trust, then it's will taxable at the 30%. No exemption is given, or it will different treatment.
No, I didn't get the question.
Ma'am, you said that now if that was a partly religious purpose, this condition is not apply, right?
Yes.
Specific exemption. So that will wholly amount is taxable at 30%, full amount of anonymous donation. Okay.
Yes. Oh no, you're asking that whether there is no limit applicable. That's what you're asking, right?
Yes, ma'am.
No, limit is still applicable. Limit will still be applicable. So
Then,
for the only for religious purposes, 115 BBC is not at all applicable. In case the trusts which are established for partly charitable, partly religious purpose, if they give the donations to be applied for the educational institution or hospital, then the 115 BBC will be applicable, meaning that 30% will apply only if the donations are more than the specified limit, which is 5% of total income or 5 lakh, whichever is higher.
मैम इन इसमें अगर हमें एनोमियस जो डोनेशन है अगर वो रिलीजियस ट्रस्ट को मिलती है तो उस केस में क्या ट्रीटमेंट होगा?
Religious trust को मिलती है तो 115 BBC will not apply. It
Okay.
will be considered as a normal donation only. It will not be taxed at 30%.
Oh, okay.
Yeah. So if it is received by the religious trust, then it will not be taxed at the rate of 30%. This is what they say. Are we clear?
Yes, ma'am.
Okay. So it's just that 115 BBC apply nahi hoga, but it will still be continued to be taxed at the rate which are applicable as the normal tax rates which are there. So it's not that, it will be exempt or something of that sort. What they are saying that the 115 BBC per se will not apply. Okay. So under section 11, it will be treated as the normal voluntary contribution only. Okay. Any doubt? Any further question? What about the total charitable trust or wholly charitable trust? What will happen in that case? In that case, it will be taxable under 115 BBC, right? So it is only for wholly religious, we have an exemption. For wholly, partly religious, partly charitable also we have an exemption. But there is an exception to that exemption that if it is for the educational or institution or hospital, it will be taxable under 115 BBC. If it is a wholly charitable institution, then it will still be taxable. So if a trust or institution is established wholly for charitable purposes and it receives an anonymous donation, such anonymous donation will be taxable under 115 BBC. Are we clear? Clear, yes or no? Okay. Now tell me, what if the anonymous donations are given with a specific direction that they will form part of the corpus of the trust?
Ma'am, normal rate?
No, it will still be at 115 BBC. So even the corpus anonymous donations which are there, which are anonymous donation, these will be still taxed at 30% under 115 BBC. Are we clear? So even if it is corpus donation, it will not be taxed at the normal rate. Yes or no? Now I'm giving you one question from your module. Let me know what will be the answers for this. Yes. The following trusts claim that the anonymous donations received by them during the financial year 24-25 are not liable to tax under 115 BBC. A charitable trust referred to in section 11, which applies the entire amount of anonymous donation for the purposes of the trust during the relevant financial year.
Ma'am, 115 BBC will be applied and
Yes,
the amount will be taxable at 30%.
correct. So basically, in this case, even if the anonymous donations are applied for the charitable purpose, doesn't matter. If it is a charitable trust, the 30% of that amount will be taxable. 30% of the amount beyond the limit will still become taxable. What will happen in the second case? A trust established wholly for religious purposes which applied 85% of the anonymous donation for the purpose of the objects of the trust.
Ma'am, 115 BC not apply.
115 BBC not apply. So meaning the claim of the trust is valid, right? So therefore, the trust is right in taking the position that 115 BBC will not be applicable to it. Any questions, any doubt with respect to the anonymous donation? Yes. Is this particular point clear?
Ma'am,
Yes.
you have written regarding the partly religious and partly charitable. The last line you have written, if the donation are received, that donation will be applied to educational institution or hospital. तो यानी इसका मतलब क्या होगा कि वो टैक्सेबल है या नहीं?
नहीं, वहां पर अगर ये एक सेकेंड सी अगर ये अप्लाई हो रहा है only for educational institution or hospital. So basically the anonymous donations are given with a specific direction that donations will be applied to the educational institution or hospital. Only in that case 115 BBC will be applicable.
Okay.
In any other case 115 BBC is not applicable. Is this clear?
Yes, ma'am, clear.
Okay.
Yes.
Now, this is about the anonymous donation. Alright? Now, this will give you 1, 2, 3, 4. Now, last one, fifth point. Any capital gains made by the trust, which will be basically my sale consideration minus any cost of acquisition or indexed cost if that is applicable prior to 23rd July. So this will give me my gross total receipts, not income. This is giving me gross total receipts. Okay. Now, beyond that, we will consider the application of the income. Now, in the application of income, what do we mean by application of income? So, see, the trust has to apply the income towards the charitable activity. Only then it can claim the exemption which is available to it. Are we getting this point? So the trust is getting the exemption on the condition that it will be applying its income either for the charitable or for the religious purposes. If it is not applying its income for the charitable or religious purposes, then obviously it will not be able to claim any exemption per se. Are we getting this particular point?
Yes, ma'am.
So therefore, the specified application of income is what will be considered over here. Now, number one is that when the Act says that you have to apply the income, the Act gives a concession. So, the concession is that you can apply only 85% of the income derived from the charitable trust. Balance 15% which is there. You can accumulate that income in a free manner. So are we getting this? So there is an ad hoc 15% accumulation is allowed, meaning it is not necessary that if you have received rupees 100 as the receipts, not entire 100 has to be applied for the charitable activities. The 15 rupees which is there, that you can accumulate in a free manner. You can either accumulate freely or you can set aside for the purpose of application in the near future. Are we clear at this point? So the balance 85% is something that you will have to apply. So 15% which is there, it is an ad hoc application which is considered. So from my gross total income, %15 of the gross total receipts is ad hoc application. Is the ad hoc application which is there. So meaning I can apply this particular amount in any way as I want. It has to be, of course, for charitable purposes, but I will not, be very keen to understand that whether this 15% is set aside, whether this 15% is accumulated, what it is done, we will not be getting into that. If you want, you can just, put these amounts again in the mode which are specified in section 11.5. Now the balance 85% which is there, that you have to obviously apply towards the charitable or religious purposes. Now out of this balance 85% which is there, you can apply towards the expenses, so you will apply towards the operational expenditure. What do we mean by the operational expenditure, students?
To running the function whatever charitable trust is doing in a
Yes,
normal routine.
correct. So basically you can apply this amount, for the operational expenditure in the nature of, let's say, salaries, in the nature of rent, whatever expenses you are generating, so you can apply towards that. Now, what is prohibited over here, what is disallowed over here, is that only when you pay the expenditure, only then the expenditure will get allowed. So even when the trust may be following the accrual system of accounting, but the trust will be allowed the expenditure only when the expenditure is actually paid out of the charitable trust. If expenditure is just accrued, it is just incurred, it will not be considered as the application of the income. So are you getting this particular point? So you can just write it over here. Expenditure allowed only when it is actually paid, irrespective of the method of accounting. So thereby, what is disallowed is expenditure incurred but not paid. So any expenditure incurred but not paid will not be allowed. So even when, let's say for example, you are following the mercantile system of accounting. So only when you pay the expenditure, only when you clear that expenditure, then only you will get the deduction. For example, there is a trust which follows the accrual system of accounting. It has the staff salary for the month of March 25. Now, this salary is cleared in the month of first week of April. Will it be allowed the deduction? Will it be considered as application of income for the trust?
No, ma'am.
It will not be considered. This will be considered as application of income for the previous year 25-26. And this is irrespective of the method of accounting followed by you. Are we clear? What is also disallowed over here? If the trust is making the payment of expenditure on which the tax is deductible at source and the TDS has not been deducted, or the TDS has been deducted but not paid on or before the due date of filing the return of income. How much is the expenditure disallowed in that case under PGBP? Yes. Yes, students.
Ma'am, can you repeat the question?
Repeat the question.
Yeah. My question is, if the TDS is not deducted or deducted but not paid, how much of the expenditure you disallow under PGBP? Which was this section under PGBP? It's a similar section over here also.
Ma'am, total amount?
No. Total amount was in the case of a non-resident. In the case of resident, how much was it?
From 30%.
Yes, correct. 30%. So here also they say the same thing. This was the section 40A1, right? 40A1 of the Income Tax Act. 40A1A, sorry, not 40A1. 40A1 was the for non-resident and 40A1A. So here also they say the similar thing, that in case the expenditure on which the TDS is deductible, but the TDS is not deducted, then in that particular case, the expenditure will get disallowed or will not be considered as the application of income. So just write down. Expenditure incurred but not paid. Secondly, expenditure on which tax was deductible but not deducted, or deducted but not paid. till the due date of section 139(1). Then 30% of the expenditure. You can just write here, instead of disallowed, you can write expenditure not considered as application of the income. Okay, expenditure not considered as application of income. Next one is the expenditure which is paid in cash. What is the limit for those expenditures?
Rupees 10,000.
Correct, 10,000. This was section 48(3), right, of the PGBP. So here also they have the same thing, that expenditure in cash over rupees 10,000, which is not paid basically by an account paid check, account paid bank draft, ECS, or the electronic mode. In that case, the expenditure will not be considered as application of income. Yes or no? Is this clear? Any question till this particular point? Yes? Yes or no? Any questions? Any doubt?
Clear,
Ma'am,
ma'am.
Yes.
in a first point, you say that gross receipts is our income, right?
Yes.
So these expenditures are allowed to charitable. After that, we are considering the tax, or we have to pay on the gross receipts.
No, you have to consider these expenses, and on the balance, you will consider the tax.
Yeah, okay.
Okay. Next particular item which is considered as application of income is any capital asset which is acquired by the charitable trust. So basically, if the charitable trust acquires any asset out of its income for the purpose of the charitable objective only, then it will be considered again as the application of the income only. What about the depreciation on that capital asset? What will happen to the depreciation on capital asset?
I think depreciation is not given because all the expenses are allowed in a once.
Correct. So where, for example, the trust has, let's say, purchased the building. Now the trust has claimed the building cost as the application of income. Now when the building has been already considered as application of income, then again you cannot allow the depreciation on that building. So application can be for revenue or for capital purposes. As long as the expenditure is incurred out of the income of the trust and it is in respect of the objects of the trust that this particular expenditure is incurred, it would be treated as the application of income even if the expenditure is of a capital nature. See, this is very different from how you do your regular computation of tax, because there what you are doing is you are identifying what is your income. Here, in order to ascertain your income, we have to identify that this was the receipts of the trust. This, out of these much receipts, the trust has applied these receipts toward these expenditures, which can be capital or which can be revenue. If the trust is applying its income in entirety for these charitable objectives by incurring these expenditure, it will not be considered as income of the trust. Are we clear? So if the cost of the building is claimed as application, there will not be any further deduction allowed to the trust. So no allowance for the depreciation on the capital asset.
Ma'am,
Yes.
if the trust will not claim the as deduction expenditure of the capital asset, then it can claim depreciation?
Yeah, then you can claim depreciation. So any one of these it can be.
Yes, ma'am.
Okay.
Yes, ma'am.
Next is, what if the trust has taken the loans and it is applying those loans for the expenditure which is to be incurred? So let's say I have taken the loan. Now, when I have taken the loan, I have taken the loan for the purpose of incurring my expenditures. Maybe I have taken working capital loan. I may have taken a loan to, purchase some capital asset. So any application from the loan amount will not be considered as the application of income. So,
Ma'am, at the time of repayment of loan, like installments are gone, then also not considered?
then we will consider. I'll come to that point. So, application from the borrowed funds or loan is not considered as application of income. But what is considered as the application of income? So, if I have repaid the loan, so the amount will be treated as application in the year in which the loans or borrowings are repaid from the income of that year. So, repayment of loan will be considered as application of income, but it is subject to certain conditions. What are these conditions? Number one, the application should be in India. So application from this loan amount should have been in India only. The application from the loan should not be in the form of corpus donation to another trust. TDS on the expenditures from the loan should be deducted. The application should not be made in cash over rupees 10,000. Right? And the application is allowed in the year in which it is actually paid. The application should not be for the benefit of any person which is referred to in section 13(3). The repayment of loan should be made within 5 years from the year in which the application was made from the loan. Yes? Any questions? Is this particular point clear? Yes or no?
Ma'am, is if there is an interest on loan repayment, uh, what is the treatment of that? And please clear the corpus donation are not included. Please explain that point also.
Yeah, so interest on the loan or borrowing will be considered as application of income. That is not a problem. Secondly, with respect to the corpus donation, so loan should not be utilized for the purpose of making the corpus donations to another trust. So basically, I should not make the utilization of the loan for making the payment to another trust, which is for the purpose of corpus of another trust. So ऐसा नहीं होना चाहिए कि I am making the payment of I am borrowing the loan and then I am considering it as application in the year of repayment. But in fact, I have utilized the loan for giving it to some other trust, and that trust will also not show it as income because corpus donations are not considered as income, right?
Yes, ma'am.
Okay. So basically, here what they are trying to suggest is, in this particular case, that let's say, for example, rupees 13 lakh is loan, and out of which rupees 5 lakh is applied for, let's say, building purchase. And then, and in the March 25, 2 lakh is repaid. So only 2 lakh will be considered as application and not rupees 5 lakh. Okay. So rupees 5 lakh is not the application of income. Are we clear about this? Any
Yes,
questions,
ma'am.
any doubts with respect to this?
Ma'am, you have written that the loan should be repaid within 5 years from the application. If the loan tenure is more than 5 years, then also it is the condition of 5 years will be applied over there.
See, I'm repaying in part installments. Okay. So whenever I'm incurring any expenditure, whenever I'm making any application from that income, now in that particular case, I should be applying or repaying that much amount, at least what I've considered as the application, what I've already utilized from that. So at least that amount I should be repaying within the 5 years. So although it's a very short time limit, but yeah, that's what it is.
It means the amount which I have applied for the charitable purpose, that
Yes,
amount I have to pay within 5 years.
correct.
Okay, ma'am.
Okay. Any other question?
Hello, ma'am.
Yeah.
Hello, ma'am. I have a doubt, ma'am.
Yeah.
Suppose that loan is waived by financial institution, whether we can treat as application of, application of expenditure regarding that waived portion.
Your voice is not very clear to me, Satish. Can you repeat, please?
Hello, now clear, ma'am?
Yeah.
Ma'am, suppose the loan is waived by financial institution, whether we can consider the waived portion as the application of expenditure.
Whether, no, I'm still not able to understand your question. Can you just put it in the chat box because there's some amount of disturbance.
Okay, ma'am. Okay.
Yeah, if you can just put it chat box, I'll just clear it right away. Any other question, any students? Okay. Now, corpus donations which are there, which are received as the donation, is it considered as income? Yes or no? Yes.
No, ma'am, if it is mod under 11, section 11.5.
Correct. So under both the regimes, first regime, second regime, corpus donations which are received by the trust institutions are exempt from income if the donations are received with a specific direction that they will form part of the corpus of the trust and the corpus contribution is invested in any of the modes specified in section 11.5. Now, any application which is made from corpus donation, that will also not be considered as the application of income. Are we clear with this point? So,
Ma'am, here is also any condition like if corpus donation is also apply 85%, then it is not, it is exempted, or all the amount is
no,
exempted from
all
income.
the amount, entire 100% is exempt. So, any application from the corpus donation is not treated as the application of the income. However, the amount shall be considered as the application. See, what they are trying to say is, listen this carefully. If I have received rupees 100 as the corpus donation, out of that 100, I am making payment of 50, let's say, for the purchase of building. Now, this 50 rupees will not be considered as the application of income. However, this can be considered as the application of income if the amount of rupees 50 is invested or deposited back in the mode specified in 11.5. Are we clear? So, application from corpus donation will be considered as application of the income in the previous year in which amount is deposited back in the modes specified under section 11.5. Again, it is subject to the conditions which are same as the conditions for the repayment of loan. See, even in the repayment of the loan, the conditions were very, very similar. That the application from the loan is not considered as application of income. However, the amount which is applied from the loan will be considered as the application in the year in which the loan or borrowing is repaid. So this amount will be considered in the previous year of repayment of loan. Here also, it's the same thing that any amount which is applied from the corpus donation is not considered as application. It will be considered as application in the year in which the amount is deposited back in the mode specified in the 11.5, subject to the same conditions that are there for the purpose of loan. So, as I said, let's say for example, if I am an educational trust, I have received, let's say 25 lakhs as the corpus donation, that this should be utilized for the purpose of setting up a science laboratory. Now, these corpus donations which are received, 25 lakhs, will not be considered as taxable if I deposit in the mode specified in 11.5. Now, if I utilize this amount of out of 25 lakh, let's say 10 lakh I utilize for the purpose of setting up a laboratory. This 10 lakh also will not be considered as application. This may be considered as application in the year in which I again deposit back into the mode specified in 11 and subject to the conditions. So what are the conditions? Application is, what are the conditions? The conditions are same, that the application should be in India, again should not be used for the purpose of donating to the corpus of another trust. TDS on the expenditure should be deducted. The cash expenditure more than 10,000 should not be there. And the application should not be for the purposes of the benefit of any of the specified persons. And if the trust invest back the amount into level 5 modes within the 5 years of the application from the corpus. Are we clear? So it's the same conditions which are there. So I'm just copy pasting. You can write it is the same conditions.
Excuse me, ma'am.
Yes.
There is मीन्स जो कॉर्पोरेट डोनेशन हमें मिलती है उसको हम लोगों को यूटिलाइज करना कोई कंपलसरी नहीं है। जैसे हमने इस केस में भी क्या किया कि वो साइंस लेबोरेटरी के लिए मिली तो हमने अगेन उसको डिपॉजिट कर दिया तो भी हमें एप्लीकेशंस मिल जाती हैं उसकी।
Right. We'll come on to that point, that what is the requirement with respect to corpus donation. We'll come to that point. That whether it could be, kept for the specified period, what is the specified period, we'll talk about that in a while. Okay, so just write an example. Just write the example over here so that you remember. Rupees 10 lakh received as voluntary contribution. Rupees 10 lakh received as voluntary contribution. That with a specific direction that it shall form part of the corpus of the trust and shall be utilized for purchase of building. Rupees 2 lakh utilized for construction of building. So this is not application of income, or this is not considered as application of income. Now out of this 2 lakh, if rupees 1.5 lakh deposited in the modes specified under section 11.5, rupees 1.5 lakh will be considered as application of the income. And this 10 lakh which is there, this is any which way is the exempt. Okay. Any questions, any doubt? Yes or no?
Clear, ma'am.
Yes. Satish, you had some question. I didn't see anything in the chat box. If you can write it, I can clear your doubt. Okay. Any other questions? Any doubt? Clear, Ginny? Yes. Okay. So basically, if you see, it is the same conditions which are there with respect to both the repayment of loan or the amounts which are withdrawn from the corpus. Okay. So if the trust is getting the direction that it will be deposited in corpus, then in that particular case, it will be not considered as my income. Now, coming towards the point that what are the conditions for this corpus of the trust? Because it is said that these corpus donations are exempt, are not considered as the taxable amount. So, what is the period for which this particular amount will be kept? So see students, this is made with a specific direction that this shall form part of the corpus of the trust. Now, this amount which is there, which is received, this has to be kept in the corpus or in the modes, this has to be, kept in the modes specified under section 11.5. And within the specified period, they have to make the application from this particular corpus. So if they do not make the application, then it will be considered as a violation. So under both the regimes, if you see, they have this criteria that they have to make, they have received this amount for the specified period only. For the specified purpose only. And that's why it is forming part of the corpus of the trust. Now, there is an onus on them to deposit that amount in the mode specified under section 11.5. If they do not do that, or if they do not utilize the amount within the specified time, then the exemption will be denied. Are we getting this particular point? So, in case the income is deposited in modes other than 11.5, or where the accumulation is done, and this is not utilized for specified purposes within the time for which it is kept, then in that particular case, it will be considered as violation. So we'll see about that particular point also in a short while. Okay. What is next considered as application of income? Donation to any other trust which is registered under 12AB or 1023C. So just write down donation to any other trust. Donation to any other trust which is registered under section 12AB or section 1023C, irrespective of the object of that trust. So whatever may be the objective of that trust, doesn't matter. If I am into, let's say, relief to poor, and that trust is, let's say, in the wildlife welfare, doesn't matter. So any amount which is paid to a trust or institution which is registered under 12AB or 1023C will be considered as the application of the income. However, if I am paying this amount to the corpus of the other trust, it will not be considered as application of income. So any amount paid towards the corpus of other trust is not considered as the application of income. So amounts should not be towards the corpus of the other trust. Are we clear? Now, when the amount is paid to any other trust, this shall be considered as the application of the income only to the extent of 85% of the amount paid. So basically, it means that when rupees 100 is donated to another trust, I will consider the application of income as only rupees 85. So 85% of the donations shall be considered as application of income under both the first and the second regime. So let's say, for example, if my income is, let's say 300, right? This is a trust A. Now out of this, how much I am required to apply? 85% of this, right? 15% is ad hoc, right? This is 15% ad hoc. Now, out of 255, let's say I am donating to another trust to trust B, let's say 100. Now, this 100 will not be considered as application of income. 100 will not be considered as application of income. Only rupees 85 will be considered as the application of income. So how much balance income I still need to apply?
15.
How much?
170.
Sorry, ma'am.
Yeah. So 255 minus 180, I still need to apply. Sorry, 255 minus 85, 170, I still need to apply. But how can I apply, students, 170? If you logically see, I have already 300 as cash income, out of which 100 I have already paid to another trust. So I can apply 200 rupees as the income for application. Are we getting it? Of course, for the purpose of computation of the tax, 85% only will be considered as the balance income which is available to me, which is 170 as you rightly pointed out.
Ma'am, it is to avoid any tax avoidation, because if other trust is liable only 85% of application, that's why it's provision there.
Yes. So I'll come to that point also, why this particular provision is there. But right now, the remaining income that we have available is $170. Correct? But what is the total application which is available to me? So in cash, if you see the cash amount which is available to me is 300 minus 100. So 200 is available to me in my cash balance, right? So the remaining income, which is 170 minus 200. this 30 rupees which is there, this can be accumulated. Are we getting this point? This I can accumulate and invest in the mode specified in 11.5. This I am not able to apply, this 30 rupees. I am unable to apply this 30 rupees at this point in time. I don't have any other expenditure. So this can be accumulated and invested in the modes under section 11. So then, ideally, what will be the exemption which will be available to me? So this 30 will also be reduced. So income accumulated is 30. Right? So what is the exemption which is available to me?
Ma'am, exemption regarding what?
How much is the exemption? Like how much I will consider as application of income?
Application is only 85 rupees, na, still now, till now.
No, it is not 85. See, amount to be considered as application of income is 85. Then it is also this 30 that you have deposited, and it is also 170 if I apply that. Are we clear? So here what we are trying to say, what we are trying to say is that if you see this 300 which is there is the cash amount which I had. Correct? Out of this, I have actually paid to another trust 100 rupees. So I have only 200 available with me. Right? Now, out of this 200, I will set aside 15% as the ad hoc. I will not set aside 15% of 300. I will set aside 15% of 200 rupees, which is coming to how much? 30, right? So this 30 which is there is the income which is accumulated and invested as per the modes which are specified under section 11.5. Now, what is the balance income which will be available to me? Yes, 85% of 200. Correct? So 85% of 200 will be 170. This is what is available to you. Correct? Out of this 170, which is there, I can apply this 170 in the manner in which as per the charitable objective. So the application which will be considered for me is going to be the 170, 30 and the 85 rupees or 100 rupees, sorry. Are we clear? Yes or no?
Ma'am, here you want to say that there is a change in advocate. Here 15% is not now. This is amount we have recalculated and according to apply it, right?
Yes.
If full amount is not utilized, we are still consider only 30 rupees our amount, not like that 50% of 300, right?
Correct. Okay. So with this, let's take a break of 10 minutes and then we get back and start again. And then I'll also explain you the reason why this provision has been introduced. Okay. So let's take a break of 10 minutes and then we start back. Just one more example I'd like to give, and then we can, continue towards the next part with respect to this same thing. Let's say
I missed something. Can you
So let's say this is 1 lakh as the income of the trust. Okay. Out of this, normally how much you consider as the ad hoc application?
15%, ma'am.
Correct. So 15% of this is 15,000, right? Balance is 85,000, which is available to you, right? Now, I am making donation to another trust. Of 85,000. So how much will be considered as application over here?
Only 85%, ma'am.
Correct. What is the 85% of this?
70.
72.25.
So basically what the Act says that you don't have to then consider this as 15,000 because 15,000 is not available to you. Sorry, 1 lakh is not available to you. What is available to you is 1 lakh minus 85,000. So take 15% of that. So what is 15% of that?
$2.25.
2.25. So what is the balance amount available for application to the trust? Is nothing but 1 lakh minus 85,000 into 85%. Isn't it? So what is the amount available?
$12,750.
12,007. So the total application that we will consider here is 2.25, 72.25 and 12,750. This makes it to 1 lakh. This will be considered as the application of income. Isn't it? In the earlier example also, that's what I told you. We don't consider 300 into 15%. We will take 300 minus 100, 200 ka 15%, which will be 30. So this will be 170, and out of which 85 is what we have considered as application. Balance remaining income available is 200 into, 200 into 85%. Correct? Which comes to how much?
Ma'am, 170.
Correct. So therefore, it will be 170 plus 85. Sorry, 170 plus 85 and plus 30. Correct? Yes or no? Is this particular point clear?
Yes, ma'am.
So therefore, in the earlier question, only 200 into 85%, which is 170, which will be taken, which makes it to 200. And then the application will be considered as entire 100. Yes or no? Any questions? Any doubts? Yes?
Clear,
Ma'am,
ma'am.
clear.
Okay, perfect. So what we are trying to do is, see, in all these cases, when the trust contributes to another trust, so what was happening is that there was circular loop which was getting created. So in order to avoid that circular loop, because if this trust, let's say for example, you can just write over here, total application is equal to 170 plus 100 and plus 30. So this makes it to 300. Okay. Now, what was happening is, let's say for example, this trust A contributed to trust B. Now, if we would have considered here 85,000 as total and not 85,000 into 85%. So this will be 85,000 for trust B as the income. This will again set apart 15% of 85,000, which will come to how much? Which will come to how much?
72.25.
72.25, right? So, sorry. So what was happening is that this 85,000, out of which first we have here accumulated 15,000. Again, then this trust is accumulating 15% of this 85,000. Now, it will not be 72.25. It should be, 1 second. 15% will be,
12.75, ma'am.
yeah, 12.75, right? So this trust will again be accumulating. Now, let's say this trust gives another, let's say 50,000, 60,000 to another trust. Then another trust will again accumulate 15% of this. So there was this circular way of which, the 15% was remaining tax-free in each and every trust. And each trust was giving donation to other trusts. So to prevent that, what they have done is that the available amount which will be considered for application purposes is only going to be the 85% of the amount donated. So even if, let's say, I'm contributing 100, the amount to be considered as application of income against the donations will be considered as rupees 85% of 100. However, for the purpose of considering the income available for application, we will not consider 1 lakh minus 85,000. Sorry, we will not consider the 1 lakh minus 72,000. We will consider 1 lakh minus 85,000, and out of that 85% has to be remaining applied. Are we clear? Yes or no? Any questions? Any doubts? Okay, anybody has any question? Yes or no? Is this point clear? I just want you to see for 2 minutes and then we proceed further. Okay? Okay, perfect. So now let's move further. Now, what are the other these application of income which are considered for the trust? Now, possibly that, it is quite possible that the trust has not been able to receive the amount because the income has accrued but maybe not received during the current year, or income is received late during the year. So it is quite possible that the trust is not able to apply the income as income is accrued but not received during the previous year, or income is received late during the previous year. See, it is quite possible, isn't it, that if the income is not received to me during the current year, how will I apply that income? I don't have the money to apply. So even though as per the accrual system, I have accrued the income, but I will not be able to apply that income. So unnecessarily, what will happen is the government will tax my income because I am not able to apply that income. So if that 15% or 85% amount which is there, if I have not been able to apply because I have not received during the current year, or I have received, let's say maybe on 20th of March, 31st of March, then I am unable to apply within the last 3-4 days, then the Act gives us an option of the deemed application. Now, what is this deemed application? So the Act says that where the income has not been received during the current year, we will consider that the income is deemed to be applied if you apply that amount in the year in which it is received or in the next following year. So the Act gives you an option that if you have not received the income, we will not consider that in the income, and it will be considered that the income is deemed applied, provided you have applied in the year in which it is actually received or in the immediately following previous year. So just write down. This will be considered as deemed application. This will be considered as deemed application condition the income should be applied in the previous year of receipt or in the next following previous year. So let's say, for example, if I have not received, let's say 20,000 in the previous year 24-25, right? And I have received in the year 25-26. Now this will be considered as deemed application for the previous year 24-25, provided that it is applied for the charitable purpose in the previous year 25-26 or in the year 26-27. Are we clear? In the year of 25-26, when the income is received, in that year we will not consider this as an income because this is already considered as an income of past year. Neither we will consider that as an application of 25-26. We will consider this as application of 24-25 and income of 24-25. Are we clear? Yes or no?
Ma'am, when income is received, then we can use in that year and following year. So it in case 2 years are there for
Yes.
application of that money.
Yes. Okay. Any other question? So this is considered as the deemed application of income. Now, what if the income is not received? Oh, sorry, income is received but received late, making it impossible to spend during the year end. So in that case, again the law says that it will be considered as application of income provided you apply the income in the next previous year. So the condition is income should be applied in the following previous year. So in these cases, the income is considered as the deemed application. Now understand that this option which is there, this option which is given, this is an option. This is not that it will be always considered like this. You have to exercise this option by filing form number 10. So this is an option given to the trust. So this is an option to trust. And this can be exercised by the trust by filing form number 10 by within 2 months prior to the due date of filing the return of income. And this option is only available for the trust under section 12AB and not under section 1023C. So basically this is available only for the trust under the second regime and not for the trust under the first regime. So this option which is there is only available for the trust which are opting or which are registered under the second regime. This is not available for the trust which is registered under the first regime. Are we clear? Yes or no? Is this clear? Now what if the amount is not applied in the next previous year or in the next in the following previous year to that year, if the income is not received in the current year, or if the income is received late, the amount is not applied in the next previous year? So what would happen in that situation? Under that situation, the Act says it will be considered as the deemed income. It will be considered as deemed income. So if the amount is not received, then it will be considered, if the amount is not applied, it will be considered as deemed income. Okay, so just write down. Yes. Write down here. Deemed income. Or first write non-application of income. Non-application of income. In the next previous year, let's say 25-26, or in the following previous year, which is 26, 27. This is we are talking about 24, 25. This shall be considered as the deemed income. Or in this case, non-application in the next previous year, which is 25, 26, it will be considered as deemed income. So if the amounts are not applied, it will be considered as the deemed income of which year you will consider deemed income. So this will be considered as deemed income of the previous year 26, 27. And this will be considered as deemed income of previous year 25, 26. Are we clear, students? Yes or no?
Yes, ma'am, clear.
Ma'am, you say that income is received late. So there is any limit for that late word or no?
No, it's a very good question, but they have not given what is the meaning of late. They have not given that. Okay?
So ma'am, it means every firm has 2 year to application of the whatever he received.
For the income not received, you have 2 years. But if the income is received, you have 1 year. Okay?
Ma'am, you have told about the Form 10, which is related to the income set apart and carry forward, is it?
No, it is for this also. So you can just write down here the option to be exercised. By finding Form 10. Just by filing Form 10, which is 2 months prior to the due date of 139 months. Okay, so this particular Form 10 has to be filed, even in this particular case. So that is even there for the income accumulated. We are going to come on that, but this is also for the option to be exercised for the income not received or income received late. Okay. Any further question? Any doubt? Yes or no?
Ma'am, this income द कैरी यानी ये कैरी फॉरवर्ड ही कर रहे हैं ना हम एक तरीके से कि हम यहाँ अभी अप्लाई नहीं कर रहे हैं, फ्यूचर ईयर में अप्लाई करेंगे, तो इसकी
Yes.
लिमिट है जैसे कि 5 इयर्स होता है यानी फॉर्म 10 के लिए कि जैसे हम सेट अपार्ट करते हैं ना, कैरी फॉरवर्ड करते हैं, तो वो 5 इयर्स की लिमिट होती है कि 5 इयर्स हो जाएगा तो वो इनकम यानी हम वापस से फ्यूचर ईयर में उसको अप्लाई नहीं कर पाएंगे.
Right. No, see, that particular thing is there for the purpose of this thing. That, what do we say? The accumulation. But it is
Yes,
not for,
accumulation.
yes, it is not for the purpose of this particular where the income is not received.
Okay, but the form is similar, form 10.
Yes.
Okay, clear.
Okay. Any other questions, students? Any other doubt? So, if you have not applied your income, this is considered as the deemed application. So for this, again, you need to exercise the option before the due date of filing, 2 months prior to the due date of filing the return of income.
Ma'am, if only in any year a charitable trust have more expenses, so it also carry forward loss like there is any concept like that?
No, there is no set off and carry forward of losses for the trust. If you have incurred more, it is done. You cannot, set off and carry forward further. Yes, any other question, any other doubt? Okay, so this is very, very clear. This is one particular set that it is saying that for exercising the option for availing the extended period, the trust has to exercise the option in writing, and that has to be done at least 2 months before the due date of filing the return of income under 139(1). Clear? And if the trust is failing to apply the income within that extended period also, then this will be considered as deemed income under section 115 BBI. Just write down. Okay. So this will be considered as deemed income under 115 BBI. Now the last point with respect to the again application of income. So what it says is that 85% of the income has to be applied for the specified purpose or for the charitable activities or for the religious activity. Now, what if I am not able to apply in this year 85%? So I can accumulate for the specified purpose that 85% which is there. So again, if I accumulate and invest in modes which are specified under section 11(5), then it will be considered as deemed application of the income. Are we getting this point? So just write down. If the trust is not able to apply the income and accumulates in mode specified under section 11(5). So it says that you can accumulate in the mode specified under section 11(5), and that will be considered as the deemed accumulation of the income. So it is only talking about the 85% of income. See, it's not talking about 15% of the income. Are you getting this point?
Yes, ma'am.
So here, if you invest these amounts within the mode specified under 11(5), this will be considered as deemed application of the income. This is my deemed application of the income. Now the accumulation which is to be done, the maximum period for which the accumulation is provided is 5 years. So I can accumulate for a period below 5 years, or I can maximum accumulate for the period of 5 years. So under both the regimes, the application of the income is the main condition for the grant of exemption. If the income is, we are unable to apply during the current year, we can accumulate. It's not that I have to find the expenditure and pay off all my income. It's not the case. You can accumulate and apply for specified purpose. So 15% is ad hoc accumulation. You can accumulate, set apart, utilize whatever you want. But the 85% which is there can be accumulated for a period not exceeding 5 years. And there are conditions for that. So what are the conditions? That you have to file in the Form 10 to the assessing officer that the money is accumulated for a specified purpose. So, what are the conditions? Filing of Form 10 by stating the period of accumulation and the purpose. The period and purpose for which it is accumulated. But the period shall be less than, maximum period is how much? 5 years. And this Form 10, what will be the due date of this Form 10? Again, 2 months prior to the due date of filing the return of income. So this is the date. Plus, here there is an additional condition. What is that? Return of income should be filed before due date of 139 months. Are we clear? Now here they say that you should intimate to AO in Form 10 by filing Form 10 before the 2 months prior to the due date of filing the return of income. Now, if you're not furnishing the Form 10 on or before the due date of 139(1), then also section 13 says that the income will not be excluded from total income, meaning it will be considered as application. So basically section 13 says that income will be excluded, the accumulated income will be excluded from total income if the Form 10 is filed on or before the due date under 139(1). Whereas section 11 says that you have to file 2 months prior to the due date of filing return of income. So there was discrepancy between section 11 and section 13 as to what is the due date for the purpose of filing Form 10 for accumulation of income. Not for the purpose of income not received or income late received. For that, you have to file 2 months prior to the due date. But for the accumulated income, there was confusion. So the CBDT clarified that through the circular that the accumulation of income which is reported in Form 10, the deemed application will not be denied even if the Form 10 is not furnished 2 months prior to the due date of 139(1), but before the due date under 139(1). So which means what? That you can file Form 10 up till due date of 139(1). Even if you don't file 2 months prior, you can still file by the due date of 139(1). So you can just write here CBDT circular due date of 139. Now, what if I fail to satisfy the conditions of accumulation? Meaning, where the accumulated income is applied accumulated income is applied for other than charitable or religious purposes. Or the amount ceased to be accumulated. Or amount ceased to remain invested in the mode specified in 11.5. Or amount is not utilized for the purpose for which it is accumulated. Or the amount is paid to any trust from the accumulated amount. Then it shall be considered again as the deemed income. This shall be considered as the deemed income in the year of violation. So are you getting this point? So basically, if you again fail to satisfy the conditions, then it shall be deemed to be the income of the previous year in which the conditions are violated. Are we clear? Yes or no?
Ma'am, here in both of the points where we are required to file Form 10, then we can file in single Form 10, or for both the topic we have to file another, because here it is the in the accumulation the condition is you can the circular said that you can file the form up to due date 139(1) also, but in other one this condition is not be there, I think.
Right. Yeah, so this extension which is there is not available for the income not received or late received. So basically, in case the form 10 will be one only, in case you have income which is not received or late received and you are exercising the option for deemed application, you have to file form 10 before the 2 months prior to the due date of 139(1), because it's the same form, you cannot file it twice.
Okay, ma'am.
Okay.
Yes.
Now,
Ma'am, charitable trust salary of employees and other administrative expenses are their operational expenses, or they are not considered in that, because they are say that other than charitable purpose. So we consider it in a charitable purpose, or they are coming in a 15% of what we utilize.
no. These are for charitable purpose only. So whatever activities that you are undertaking to maintain that organization will be considered for charitable purpose.
Okay, ma'am.
Yeah. Okay. Now this will be considered as
Hello, ma'am.
yes.
Hello, ma'am. In the last point, accumulated amount paid to any trust is one of the failure condition, ma'am. Is it, ma'am? Accumulated amount paid to any trust.
Yes.
Ma'am, suppose income is received by the trust during that year also, and in that income, the trust will pay to any other trust. In this case, we can claim 85% application.
Correct.
Suppose income is not received but received later. So in that case, if accumulated amount is paid to test, we can disallow entire amount. Is it, ma'am?
Okay. See, don't get confused within both the things. Both are very, very different from each other. So, if the income is not received during the current year or income is late received, right? So, that I allow it as a deemed application because I'm unable to apply the income and I will be able to apply the income only in the year in which I receive it. Correct? Or if the income is received late, I don't have as many days now possible to apply that income. Within last 1 week, let's say if the income is received in the last 1 week of my close of financial year, I'm not able to apply that income. So that will be considered as deemed application for me. And the condition is I will apply this income at least in the next year. Now I can apply this income even by making the payment to another trust. That is absolutely all right. Accumulated amount is what? That if I have not been able to apply any income which is received during the year. And I am saying that, okay, I'm not able to apply this income at this point, but I will accumulate this amount. I will set aside this amount for doing an expenditure in future. And the purpose for that expenditure also I have to give. Now, out of this accumulated amount, I cannot pay to any other trust. I can only accumulate for specified reason, for construction of building, for construction of hospital, for beds, for whatever. I cannot use this amount to pay to any other trust. Out of the accumulated amount. From other amounts, I can still pay and claim 85% of that amount as the application. Are we clear?
Okay, ma'am. Now clearly understood, ma'am.
Yeah, okay. So, what will be my deemed income of the previous year in which the amount, accumulated amount is applied for other than or religious or charitable purposes? So, it will be the income of the previous year in which the income is applied. Where amount ceased to be accumulated, it will be deemed income of the previous year in which the income is ceased to be accumulated. Amount ceased to remain invested in 11.5, then it shall be deemed to be the income of the previous year in which the income ceased to remain invested. Amount is not utilized for the purpose for which it is accumulated, then it shall be deemed to be the income of the previous year, which is the last previous year for which the income is so accumulated. So let's say, for example, if the amount of rupees, let's say 1 lakh is accumulated for 3 years, let's say. So previous year 24, 25, 25, 26, 26, 27. So it will be the deemed income of this year if the amount is ceased to remain invested or is not utilized for the purpose for which it is accumulated. and any amount paid to any trust will be deemed to be the income of the previous year in which it is paid to the trust. Paid or credited to the trust. So therefore, you can just write your point where I have written donation to any other trust is allowed as the application, but any amount paid towards the corpus of the trust or amount paid from accumulated amount to the trust is not considered as application of income. Are we clear? Yes or no? Is this fine?
Clear, ma'am.
Okay. Any questions anybody has? Fine. So this is basically how the income of the trust is computed. Right? So you have the receipts, which are the total receipts. Out of that, you have the application of the income. Now, last one, application of the income which is there, which we have to consider, is basically in relation to the capital gains. See, we have seen that there is going to be a capital gain income in case the trust sells any capital asset. So, which is what we have written over here. If the capital gain is there, that will be considered as my income. Now, with respect to this capital gain, what is the amount of the application that we will consider? So, application in respect of capital gains. If you remember, under 54F, we used to have this reinvestment ka exemption, isn't it? What was that? Yes, what was this 54F? That you will get the exemption if you reinvest the amounts, isn't it? So similarly, under the capital gains for the charitable trust, what they have said is that here also you will get the exemption. Not exemption, here also it will be considered as application of the income if you purchase a new asset. If you purchase a new asset, it will be considered as the application of the income only. So where the entire net consideration is utilized for acquiring a new capital asset, the entire capital gain will be considered have been deemed to be applied. So entire sale consideration is invested or is utilized for acquiring new asset. So in that case, entire capital gain is deemed to be applied. Where part of sale consideration is utilized for acquiring new asset, then the application shall be, my application shall be the excess of the proceeds utilized over the cost of new asset. So let's say, for example, if let's say the asset transferred, the cost of acquisition is, let's say, rupees 1 lakh. Sale consideration is, let's say, rupees 1.5 lakh. Now, let's say in situation 1, cost of new asset is, let's say, rupees 1.5 lakh. And let's say in situation 2, cost of new asset is, let's say, rupees 1.2 lakh. So what will be the application in the first case and in the second case? Yes, students. What will be my application? Yes. It's very simple, students. Please tell me.
Ma'am,
Ma'am,
in
in first 0.5 lakh application,
Correct. And in the second case?
.3 lakh.
Correct. So it will be sale proceeds minus cost of new asset in the second case. 0.3, no, it will be, yeah, 0.3. Right. Yes or no? Is this clear?
Clear, ma'am.
Any doubt, any questions with respect to this entire application?
Ma'am, here application is consider only this amount, right? Earlier we also taken it like entire amount is a capital asset is also application. So what we consider?
No, I didn't get your question.
सर मैम इससे पहले हमने कहा था ना कि हम कोई बिल्डिंग या प्रॉपर्टी लेते हैं तो उसको एंटायर अमाउंट को हम लोग एप्लीकेशन मान लेते हैं
Correct.
राइट तो यहाँ पे सिर्फ इन द केस ऑफ सेल ऑफ एसेट्स तब हम लोग ये एप्लीकेशन करेंगे
Yes. So if you purchase a new asset out of your income, then it will be considered as that you have purchased a new asset other than from the capital gain income. The entire cost will be considered as the application of income. But if you utilize your capital gain, if you had a capital gain and then that capital gain amount is or the sale proceeds amount have been reinvested into new asset, then if the entire sale consideration amount is reinvested, entire amount of capital gains would be deemed to have been applied for charitable or religious purpose. If a part of net consideration is utilized, then the capital gains deemed to have been utilized would be the excess of the proceeds utilized over the cost of the new asset. Are we clear?
Ma'am, if new asset cost is more than sale consideration, like here it is case of 2 lakh, then 50 lakh also our sale consideration, application of income,
50 lakh? No.
4.5 lakh. Ma'am, here in a first example, if sale consideration is 1.5 lakh and we purchase a new asset of rupees 2 lakh, then what is the amount of application here? It's 1 lakh.
Yeah, it will be this amount of the sale consideration only, which is 1.5 lakh. So basically the capital gain, sorry, 50,000.
50,000. And when, ma'am, what about we acquire from our income? So because new asset cost is 2 lakh rupees.
Hmm.
Then
Correct.
we also
Yeah.
50,000 as
So,
application.
yes, if you say that you have acquired from your income, then of course you can get the balance amount also, which is over and above the capital gain amount. But the capital gain which will be considered as application is only 50,000. If your sale consideration was 1.5 lakh and you have invested 2 lakh, so you can get the balance amount because you have applied from your current income.
Okay, ma'am.
Yeah. Any other question? Any other doubt? Here, it would be, I think here I have made a mistake. One second. This should be not sale proceeds. This should be the cost of old asset minus new asset. Sorry. This should be 0.2 lakh. It should be the cost of old asset, not the sale consideration. Please correct it. So, it should be the cost of the old asset. Okay? Yes or no? Any other question? Any doubt? Fine. Okay. So let's proceed then further. Now we are moving towards the next part of the computation only. So again, under the computation, there is something that I was constantly referring to as deemed income. Right? Now, there is a specific section for that, which is deemed income under 115 BPI. So we have to understand that what is this deemed income under 115 BBI. So just write down. Or you can just write specified income under 115 BBI.
Excuse me, ma'am. Ma'am, here is formula is cost of new asset minus cost of old asset, right?
Yes.
I think, ma'am, we upper side we write cost of old asset minus cost of new asset.
Yes, sorry. This will be okay. Now coming to this specified income under 115 BBI. So what are the categories of income which are covered over here? See, one or two categories we have already covered in terms of while we were dealing these specific sections. Now, again, there will be, of course, recap of that, but there are other set of incomes which are also covered under 115 BBI. So, what are these? Number one, under 115 BBI, what they say is that the income, if it is applied for the benefit of any person, which is a person referred to in section 13. Now, section 13 is what? Section 13 is basically pertaining to the denial of the exemption. And there are certain persons listed over there, for example, trustee, administrator, all of those of trust. If you incur any expenditure for them, it will be considered as for the specified persons. We will talk about that. But first understand what are the specified income over here. So, any income which is applied for the benefit of prohibited person under section 13(3). Okay. Income accrued or income accumulated or set apart, which is not utilized. Income accumulated beyond 15% or in excess of 15%. Which is not utilized. Or where you can write down accumulation is not allowed. Third, what was the other category that we have seen so far where I told you deemed income?
Ma'am, when income received late
Correct,
or not received now.
correct. So, where, for example, the income is not received during the previous year, or income received late. So, in these cases, what was the condition? What was the condition?
Ma'am, income should be applied in following previous.
Correct. Applied in next previous year or the following to next previous year, right? And in this case, income should be applied in the next previous year, correct? So if this income is not applied, then in this case, it will be deemed income of the next to next previous year, right? And in this case, deemed income of the next previous year. In this case, income accumulated in excess of 15% where accumulation is not allowed. What kind of cases will it fall here? Where Form 10 is not filed within the due date of 139(1), right? What other category that we discussed?
Ma'am, income not received during the previous year, its income should be applied in a year income received, right?
In the next previous year in which it is received or the year following to that previous year. So you get 2 years for that.
Yeah.
Okay. Income accumulated, but in that case, what happens? You are income accumulating the income, but you are not applying it for charitable or religious purposes. So
It is deemed income when they are applied for other use purposes.
charitable or religious purposes. Then what else was there? Income not remaining or income ceased to be invested in modes What else was there?
Accumulated income paid to any other trust.
Yes, paid to any trust, not utilized for the purpose for which it is accumulated. Income ceased to be accumulated paid to any trust, not utilized for specified purposes within the time, right? So in this case, it will be deemed income of previous year in which not applied. In these cases, it will be income of or deemed income of previous year in which income ceased to be accumulated. In this year, it is deemed income of the year previous year in which paid or credited to the trust, and in this it will be deemed income of the last previous year. Are we clear? What else is there under 115 BBI? So other than that, under 115 BBI is income applied for charitable purposes outside India. Okay, income applied for charitable purposes outside India. Now, if this be the case, this is considered as deemed income, and this is going to be taxed at the rate of, what is the rate? 30%. This is going to be taxed at the rate of 30%. Are we clear? On the gross basis, without any deduction of the expenditure or any other deduction. Are we clear? So just write down. This shall be taxable at 30% on gross basis. That is without any deduction or the expenditure. So just remember, students, see, if there is a payment to another trust, if it is for corpus, this is not application. If it is from accumulated amount, this is not application. Right? Rest, it is considered 85% of amount donated is considered as application. Are we clear?
Clear, ma'am.
Okay, so this you have to remember. Fine. Any questions, any doubts so far? Yes or no? Okay. One more point, just remember. I'm just making a small remember for chart for you so that you can remember. See, if the method of accounting by the trust is on cash basis, then income which is there is recognized only on receipt, right? There is no problem. Expenditure, we will also recognize on payment. There is no problem. But if the method of accounting is accrual, then income is recognized on accrual, right? But income which is not received, this can be a deemed application. This is allowed as deemed application on Form 10 filing if income applied in the next previous year or following to next previous year, right? As far as the expense is concerned, how will the expense be allowed? How will the expense be recognized?
Ma'am, only on cash basis.
Correct. So expenditure, even in the case of accrual method, will be still recognized only on payment. Yes or no, students? Is this particular point clear? Is trust taxation clear to you till now? Yes?
Yes, ma'am. Clear.
Okay, everybody, is it clear?
Ma'am, here expenses is recognized on payment, but some expenses we are deem application is also applicable here, na?
Deemed application, yes, that is true, but that is out of income. See, expenditure, I'm talking about the actual expenditures that you are making. So unless and until you have paid for those expenditures, you will not be allowed. So on accrual, you cannot recognize. Right? So you cannot book an expense or make a provision for expense. You have to actually pay that expense, only then it will be considered as application.
Yeah, okay.
Okay. So students, see, now what we are left with is section 30, which is denial of the exemption, accreted tax, which is also called as an exit tax, and the registration. So what we will do is, I think we will have to continue this particular topic in the next class that we will have in the month of January, because on 27th you have a lecture on taxation of digital transactions. So I think in the month of January we will have to complete it. Meantime, I will also upload a question which you are required to solve and come for the next class. But what I will be requesting is, since these 3 topics are left, I would request you to revise when you sit for the January class, because it should not happen that you have not revised and you are not aware about anything and you've completely forgotten. So don't do that. That will be a small request from my side. So please revise and then sit for the next class, because in between you have a different lecture now. So I think we will stop here for today. We will continue in the next class, and I will wish you a very happy new year. Please utilize your time judicially during these breaks. Please revise, please study direct tax. Whatever we have done so far, please keep revising that. Please start practicing that, because then only it will be helping you out. Thank you so much, Mitali. And I please hope that you please solve these questions so that it becomes very easier for you to, remember these concepts, because sitting in the class is one thing, but practicing would be another thing. So I would request that next 7-8 days, if you get in hand, at least spend 12 to 14 hours studying. If you don't have articleship during that time, if you have articleship, we can't help really much, but as much as you can get your time, please utilize that effectively. Okay, so thank you so much, students. Wish you a very, very happy new year. See you in the next class.
Thank you, ma'am. Happy New Year to you too.
Thank you.
Thank you, ma'am. Happy New Year.
Thank you. Yes, sir.